This is the European edition of Breaking Banks, the world's #1 fintech podcast and radio show. We bring you the European unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving fintech scene today. A truly localized podcast with both English and local language content, with some of the world's most well-known hosts and influencers in the fintech sector globally. Join us every week as we explore what makes the European Union a phenomenal proving ground for many of the fastest growing fintech plays in the world today. Okay, let's roll.
Hello everyone, very much welcome to episode number 284, no, 48, of the Breaking Banks Europe podcast. We're here, of course, to talk to you about what's happening in the land of fintech, and this time we're going to do news from the fintech front. What's happening in the industry, what's going on, what are the latest trends, what are the latest developments, which companies are hot, which are not. And we're going to do that with a bit of a view from both Europe and the US. And we've got some distinguished guests that can actually tell us a little bit more about these two respective markets. First of all, I'd like to, of course, to introduce them to you. And first of all, I'd like to introduce Gabriela Orea. Gabriela,
very much.
Hello.
How
are you doing?
It's a pleasure to be here for me. So thank you very much for having me.
Great to have you here, Gabriela. Where are you based? You're in Spain, right? In
Madrid.
which city?
Yeah, in Madrid. I'm from the north of Spain, which is called Asturias. Let's do a little bit marketing of Spain. But I'm living in Madrid for, 20 years, something like that. So
okay, cool. Really nice. And we'd love to hear from you a lot about, so you're with Denarius Finance and you're an independent board member. And so we're really keen to learn more, because you're a specialist in licensing wealth tech, a little bit more about the developments in that market. And we'll pick on quite some of the topics in that space. So really keen to have you on the show. Thanks a lot for joining.
Thank you.
And we've got also a distinguished guest a little bit further away, Alex Johnson, based in the US. Alex, how are you doing?
Doing well. Thank you so much for having me on the show.
Great. So where are you based in the US?
I am based in a small town called Bozeman, which is in Montana. So I am in the Rocky Mountain region of the US. And I'm enjoying some beautiful fall weather. So things are starting to get a little colder, which is nice.
I recognize that as well from here in Amsterdam, where I'm based at the moment. The leaves start falling and things are getting pretty wet and cold.
Yes.
But then again, the turn of the seasons also make things nice, I believe. So, but great to have you on the show, Alex. You're the founder of Fintech Takes, right? So you really look at what fintech and banking are currently all about, how tech is changing things. So you have quite some experience in this space, and we'd love to tap in on all of that.
Absolutely. Looking forward to it.
Can you tell us a little bit about the things that you do with Fintech Takes? So what kind of platform is it?
Yeah, absolutely. So Fintech Takes is a newsletter and podcast that is published multiple times per week. And as you said, we analyze the intersection of banking, finance, technology, public policy, and regulation. So we try to sit sort of at the intersection of everything that fintech is changing. Being based in the US, I tend to have more of a US-centric lens, but do my best to try to learn from what's happening in other regions, including the EU. So I'm very excited for today's conversation.
Yeah. Great to hear about that, Alex. And of course, it's really nice also with these conversations that we can actually enlighten each other a little bit about what's going on the other side of the pool. Mm-hmm. And Gabriela, of course, I said something about wealth tech, but you're also a board member for a neobank currently. Can you tell us a little bit about what's keeping you busy?
Well, a lot of things, because I spent more than 20 years in private banking, also creating a new bank. And this is my second adventure in the neobank landscape. So it's very nice for me. Denarius Finance is a Spanish neobank, primarily focused on serving a small and medium-sized business, and specific in healthcare. So I think that's a new thing, because they combine non-financial services and financial services. So we can try to go with all the path with our clients, dentists, vets, and a lot of sectors from the healthcare sector. So I think that's pretty cool. We are on the radar, but I think that in the next months you will have a lot of news about us. And besides that, I also creating and launching a new fintech with InsurTech cyber. Maybe we are going to create a little bit noise in the market, because I think that people want something more than a robo advisor and a pension plan. So I think that's a nice combination. And I think that fintech is always in a first step than insurance companies, and they are looking for digitalization, but also they are looking for new sectors and new ways to contact the clients. And I think that the insurtech thing could be a nice place to be.
Yeah, definitely. Yeah, I think InsurTech remains quite a tough field, I believe, because it's such a low interest product from a customer perspective very often. But if you look at the whole value chain, there's a lot of opportunity still to improve how insurance actually come to play.
Yeah, because I don't know why. I think that they have a lot of legacy on their tech systems and also don't understand the really customer needs. I think that on financial, we understand more things, and we read a lot of articles about customer-centric solutions. But I think that in the industry sector, in the insurance, I think that they are far away from that. So.
But also partly product driven. I think just like people don't, it's hard to, for example, interest people about their pension as well, because it's a non-current product, right? It's not something I can do anything with this year, today. It sits somewhere, and I might need it at some point. But until then, what can I do about it? Yeah. And I think that's something that insurance actually also suffers from a bit. It's fairly non-influential product in that sense. So it's quite tough one to get people to care. I basically see very often.
Yeah, and I think that the new generation are tired of investment funds, robo-advisor, or pension plans, as you said, and they are increasing gravity toward other types of products. Maybe alternative are clear, at least for me, the new form of investor. And in my humble opinion, we are open a new wall when we talk about tokenization. I don't know if you want to talk about that, but I think that the tokenization is the new way to invest. I think that we have stock, shares, funds, but for me, the next thing is talking about wallets and what can we do.
Yeah, I think we can in any case create a lot more liquidity in a lot of markets if you use tokenization, because let's say currently the administration is just not able to deliver real liquidity on a day-to-day basis for a lot of assets, and that's a big promise indeed. Yeah, I think. What do you think about that, Alex? Do you see similar development as well in the US with an interest for tokenization of assets and investing in alternative assets, for example?
Yeah, we definitely do. I mean, I think the interesting thing about a lot of things in the investment and wealth management space is just that it is very cyclical, right? And so there are these opportunities where, for example, when interest rates are low, there is this really keen focus on, well, where can we generate yield? Where else can we look? And if you're particularly, as Gabrielle is saying, if you're a younger consumer and this is your first sort of entrance into the market, you're not gonna know that people in the past haven't been able to buy tokenized shares of a sports car that's worth X amount of money, but that's available to you now through this app, and it generates these great returns. And so I do think there are opportunities to bring new asset classes and to bring new categories of investors to those asset classes. And tokenization, I think, as a technology, definitely enables that. The thing that I'm really curious about is, when the environment changes, how do those asset classes persist and sort of what happens, right? Because, obviously we've seen, I think, crypto be a pretty durable asset class across different macro cycles. I mean, obviously it's kind of gone through boom and bust cycles, but it's overall, I think, been a pretty durable asset class. When you extend tokenization into all kinds of different areas, stocks of companies, real estate, wine, art, collectibles, I think the question is, how much liquidity can exist in those markets when, at least in the US, now buying treasury bonds is also much easier, and at current interest rates is also pretty attractive. So
Yeah.
I do think the macro environment plays a big role in where these opportunities present themselves. But yeah, clearly tokenization unlocks new asset categories.
Yeah, I will have to think about regulation. And you know that here in Europe, we love regulation more than anything in the world. So we are going to have MICA also here in Spain. We have a new law about the stock markets, and all these things are going to be regulated. And I think that we are going to see more stock markets talking about tokenization, that we can see those secondary markets to do liquidity to all those assets. So I think that it's going to be a huge opportunity. And I think that the young people want to invest in other things. And I think that we have to look at them to build the next 5 or 10 years, and we have to do it right now. And the problem is that technology is locking a lot of things. Now we go back to the technology legacy of the banks, or maybe even the mindset. You can see a lot of PowerPoints, but at the end, there's not an MVP, or the MVP is never going to life. No, so I think that the strategy is going to be more than a strategy. It has to be real, and I think that's very, very tough for those days, because also I think that many executives who are very creative, innovative, and maybe disruptive, but all these things puts their bonus on our risk, right? So
yeah, that's always a tough one. I think that's generally why bankers are pretty risk averse, right? So and innovation is always imposing a risk.
Yeah,
I'm afraid. Yeah. But I think the positive thing as well is what I think it's also going to drive tokenization to a large extent is the fact that it's actually being more decoupled from crypto by itself, because crypto remains quite a dangerous area for banks and central banks, for example, to engage with, right? So they still feel they don't, even though with MyCar now coming up, they don't have the full grip on what these assets mean and what the actual value is behind it. And so there's a big risk still that certain assets might actually comply, but their promise might not be worth what people expect it is. So it's getting better, but who knows? But I think that the concept of tokenization is actually, of course, something you could also take independently of crypto and blockchain altogether, right? So it's basically just a way of administering things in a different way, making them more liquid, which makes it quite appealing. And if you take it away from the blockchain crypto space, I think it actually makes it much easier to take it mainstream.
But I think that we also need more education, maybe on boards, on the high steering committees. I think that the education is so important, because, as you said, a lot of people think that token equal to crypto, and it's not real the same thing.
I agree. So, because let's say, for example, Alex, I think crypto has also been a hot topic with the regulators in the US, right? What's going on at the moment there?
Yeah, it definitely has been. Echoing the previous comment, we love regulation here too, and it does tend to hit different parts of the industry differently. Crypto has been a focus of regulators in the U.S. for really the last 5 years in particular. From the SEC's perspective, that everything is a security, whether it is or it isn't, to bank regulators having, I think, a nervous attitude about crypto generally, which really expressed itself during our spring banking crisis last year, where there were certainly some banks that were kind of dabbling in crypto, and as crypto as an industry kind of pulled back, that created concentration risks for banks that were very sort of focused on crypto. So I think regulators across both investment and wealth management and banking have definitely expressed concerns about crypto. The interesting thing, though, is that at the same time that they're expressing concerns about crypto as an asset class and concentration risks and some of these areas, they also, I think, are very open-minded and very interested in the application of distributed ledger technology outside of crypto as an investment opportunity. And so sort of separating those two things, and to your point about tokenization doesn't have to mean crypto, that's, I think, the angle that regulators are much more interested in. And
Yeah.
so we see a lot of conversations happening about, you know, corporate finance, B2B payments, some of these areas where I think there is a recognition that the way that we essentially keep track of assets and the way that we ledger and manage sort of trust across multiple counterparties could
Yeah.
be much more efficient than the way that we're doing it. And you know, blockchain, stable coins, tokenization, all of those I think are seen even by regulators as promising areas that we should look at. And you know, if you read some of the comments from regulators in the US, they're actually pretty excited about that stuff. And so I think that's an area where we're going to see more developments. And you know, I'd be curious to get the European perspective on that, because one of the biggest, I think, opportunities for distributed ledger technology is actually kind of creating a common interaction or integration layer between payment systems in different countries. So a lot of this comes back to like remittances, settlements,
Yeah.
you know, cross-border trade finance, where there's just so much inefficiency and cost built into the way that we do it now. And I think distributed ledger technology is seen as a way to reduce a lot of those costs.
Yeah, but there, and I think that the European Union is very keen on those things if you read all the regulatory documents. But I think that also we have the central bank and also the banks and, you know, the power of. So I think that maybe the debate can be there. But I think, as I told you, for me, the bank account where you put here, we call it like value account, which is the account where you settle your stocks, your funds, whatever, for me, has to evolve to the wallet. And the new generation are going to buy and sell the things inside those wallets. So for me, the value account 2.0, 4.0 is going to be the wallet. And I think that we have to change the mind and educate about that and about the possibilities of doing a lot of things. And also you can have your stock token your token stock. So I think that there's a future there. And you can also buy your HSBC stock by tokenization. So it's going to change. And I think that the infrastructure is what is going to change the things and also the regulation.
Yeah. Yeah, I think it's you actually the things that you're touching on, I think are linking me to two interesting developments I think that we've seen recently that we can talk about a little bit here in this sense. One is actually the stablecoin issuance by increasingly a number of parties, like for example PayPal as well. Right, we've seen this whole game starting with Facebook starting out with this with their Libra experiment to issue a stablecoin for payments. And we've seen multiple that didn't go so well. But of course, it did trigger everyone to also fire, for example, the central bank digital currency market, which of course is now where most central banks are also putting in a lot of effort to issue their own stable coins. But actually, recently, we've seen also that increasingly private parties are offering stablecoins as well, as on different for different goals, right? And either as a sort of a settlement part for payments, or on more the settlement of assets, right? For example, in the crypto markets to work with. I'm curious to get your takes on that as well. So, what do you think about those developments, Alex? Maybe if I can start with you, what's your take on the stablecoin rise?
Sure. Yeah. I mean, I think stablecoins probably have been the most successful sort of development coming out of the crypto and tokenization space in terms of a use case that everyone can agree on that has value.
Yep.
Because it does strip away all of the sort of speculation and risk that I think make people nervous about crypto. And so stablecoins, by definition, are really designed to just be sort of that integration layer that allows for other activities to happen. Obviously, we've seen a bunch of private companies, as you talked about, including PayPal, get into stablecoins and build stablecoins. I think for me, the thing that I am kind of constantly struck by with stablecoins is there is this I think, discounting of the value of stable coins by people who live in countries with stable currencies, right? And so you live in the US or you live in Western Europe, you generally, I think, don't appreciate that. A thing we take for granted is that our currencies and the ways they're managed are relatively stable. They act as a good store of value. They act as a mechanism for conducting commerce globally. A lot of people living around the world don't have access to that, right? And so a lot of, I think, the most promising use cases around stablecoins relate to providing more stable mechanisms for payments, for the storage of money, for the transfer of money, to folks living in the global south. And, in the US, we see a big corridor developing between North America and Latin America. I think similar corridors are sort of popping up in other places, but to me, that's the most obvious starting place for stable coins. And I will add that in the US, we are sort of politically unable to have the conversation about a central bank digital currency and doing sort of a government-backed approach to stable coins because we have a lot of natural suspicion among our citizens around surveillance and those types of issues. And so I think that's why we've seen companies like PayPal sort of step in to fill that gap. My understanding is that in other countries, you're able to have a slightly more rational conversation about maybe the central bank should be involved in this. And I'm jealous. I wish we could have that conversation in the US, but it's just not politically viable.
I think actually the US also ordered the project to launch a central bank digital currency. I think in 22 or so. It's been very much behind the scenes, I think, since then. But I believe that they're working on something, right?
They definitely are. Yeah. I mean, I think all of the folks who work at the Fed and anyone who touches this stuff from a regulatory perspective, like they're very closely watching stablecoins. They're very intrigued by sort of the promise of how this could work on a number of different levels, right? Everything from financial inclusion to, using currency as a tool of diplomacy and foreign relations. Like there's a lot of interest on a lot of different levels in stablecoins. But as you said, we have to keep it very quiet because for example, when we rolled out faster payments in the US via FedNow, even that, which has nothing to do with stable coins or central bank digital currencies, kind of got tagged with that politically, and it became a big issue. So we have to move quietly, but I do think behind the scenes, there is a lot of work and interest in that.
Yeah. Cool.
Yeah. Well, I think that in Europe, we are one step further. You can read yesterday that Société Générale, Forge and Bitpanda announced their partnership in digital asset, and they are going to launch a stable coin, a euro stable coin. So I think that obviously we are one step further.
Yeah, I think there is some room, although I do also see that a lot of European banks are still very wary to work with crypto parties directly, especially in the Dutch market. But
Société is a great news.
Exactly. I think it's a good move. I also know one German bank, I think, or two are also offering crypto accounts. But especially also, I think that the rise of stable coins could also be a big access. If you talk about tokenization, it's actually an enabler where these stable coins could also play an important role potentially. Yeah, it's quite interesting development, I think, from that perspective.
Mm-hmm.
Of course, we wouldn't be very likely to have a very high uptake of the PayPal stablecoin, as PayPal is not a major means of payments here in Europe. But perhaps other they will get follow from more European perspectives. Could be quite interesting.
I use it every day, so I'm a great client of PayPal.
Okay. Very good. Here it's not so popular, I know, but it varies quite a bit from country to country, I know, across Europe as well. And so one other thing that triggered me, Gabriela, what you said is that, at one point, actually all these assets, especially when they become digital, they should come together in one wallet, right? So, and I think it's interesting to also talk about the neobank perspective there, because I actually see, I try many bank accounts, so I'm probably somewhere on the suspect list because I have too many bank accounts, so I must be into something illegal, but I just like to try all of them. So, but also with these neobanks, you too? Okay, yeah,
I have a
you're a
lot of.
dangerous group, probably. Yeah. But it's interesting to actually look at what kind of features they're offering, right? And I think it's actually quite much like you were saying. If you go now into these neobank wallets, especially the ones that actually have a peer-to-peer offering, or let's say have a consumer offering, they do now crypto investing, stock investing, insurances. You can buy your eSIM there. They can really take care of your whole financial perspective from different perspectives. I think it's quite an interesting development how far they go from that end. Is that what you meant as well with that?
Yeah, no. For example, here in Spain, we have all the neobanks, and we had a neobank German one, which was called Vivid, and I really like Vivid. I don't know if you know
I haven't
them.
tried them yet, but
Okay, but you have to do it. And if you pay something with your credit card, you can round that, and then you can have a fractional stock. So
okay. Yeah.
they help you to save and to understand how a stock market is working, and I think that's pretty cool. And now they are coming back, as I can read on the news. But for me, as I told you, we have N26, we have Revolut, we have a lot of them. But for me, the best by far is Revolut. They managed to get people increase their interaction with the platform from just a simple car. If you remember that, you are living in Amsterdam. If you go to the UK and you have to change euros to pounds, it was so nice. And now it's interesting how friends now tell you, I'm applying for a loan in Revolut. And at the end, in Revolut, you have a loan, you have a credit card, you have now you have also a row advisor here, because everybody now has a row advisor. So because of that, for me, the future, it has to be one step further. And I think that people change their minds and I say, okay, we are not going to avoid it. Maybe we can pay for that. And I think that also the way in which neobanks are charging the client is different, and the client is notice that the neobank is really working for them. And I think that traditional bank still don't have that engagement with the client. And I think that's something that I'm so tough on that, but I think that communication here, at least in Spain, for the traditional bank is so hard to solve. And they are giving us space, and also with a lot of M&A operation is going to be a great place for the neobank that can understand the client. And here in Spain, the only thing that maybe Revolut or N26 has to be maybe the first bank of all these new generation is having loans and mortgages, because I think that here in Spain, everybody has a house. So the mortgage is so important for us. And we only have one neobank here in Spain that has mortgages. So I think that this is the future. But for me, the Revolut case is the best by far. N26 is still, I don't know what's going on.
Yeah, they had some regulatory troubles as well. So they had to do a client stop and focus on AML and KYC for quite a while, I believe. It's interesting. I also might have a new one for you. So I have a new bank to try. But do you know Bunk already?
Yeah,
have you tried it?
No, because I don't know what's going on here in Spain, because I saw a lot of notice and even jobs like country manager for bank and that kind of things, but no, I didn't test it. Okay. So
I would recommend that as well. It's a good competitor for Revolut.
Yeah. I'm going to promise that I'm going to bank onboarding, but you have to go to Vivid.
I will. Yeah, it's a good one. So Alex, enlighten us a bit. What's going on in the US with regard to the neobanks? I mean, you must have tried them all as well, right?
Yeah, I have a sock drawer full of debit cards from every neobank, I think, at this point. So I have tried a lot of them, probably to their annoyance, because I'm not a very profitable customer. I'm just sort of someone who experiments. But yeah, I've tried them all. Bunk is coming to the US, which is very exciting. Yep. I think that the dynamic we see is very similar to what was just described, where there's a real focus on rebundling right now. And so we went through the phase of unbundling the bank and finding a specific wedge that you could build an initial base of customers around. But I think particularly as you serve customers that are a little bit older, that have less time, that are moving into a different phase of their financial life, they want a bundle. Bundles are great, right? Because it's a convenient place to get lots of different services. To the point that Gabriella made, it's easier to monetize when you have more things that you're offering and you can provide a package. We've had the benefit, I guess, in the US of Durbin exempt interchange rates for debit cards, which are relatively high. And so that's been a way you could make money without some of those other offerings. But even that, I think, is kind of burning itself out. So now you see, SoFi, which has actually become a bank in the US, they've bundled their way into a much broader set of offerings. Varo, which has also become a bank, is trying to do the same thing. Chime, which is not a bank, but is probably going to become a public company relatively soon. They are also in the process of kind of figuring out what that bundle includes. And it's interesting because, to the point about Revolut, I think Revolut's been a good example of, you don't necessarily need to build out that bundle the way that a traditional bank has. And so you might want to offer a credit card, you might want to offer BNPL, you might want to offer an installment loan, you might want to think about getting into auto or mortgages or wealth management. Those are very traditional bank categories. But you can also get into other types of value-added services that can be a part of a bundle or a membership that you pay for. And, I think that, like if you look at Chime as an example, they have a very specific focus on lower income consumers and households, folks who are probably less likely to have like a good credit score. And so the way they've been building out their bundle, it's based on the assumption that their customer base isn't necessarily going to want the exact same standard bank products that a prime banking customer would want, and they have to think a little differently. So they're getting into earned wage access and sort of employer-sponsored financial services products. I expect to see them get more into sort of an integrated environment with other merchants where they're working on bringing kind of merchants into their ecosystem. They're just starting to dip their toes into lending, which is a very dangerous space because particularly for their customers, there's a lot of risk there, but it's a very profitable area as well. So, they are moving slowly, but doing that exact same thing that Gabriella described, which is rebundling into a broader set of services and trying to establish a more sort of robust business model where customers would actually be willing to pay for their services.
And do you know something, Alex? For me, the bank of the future must be like WeChat or something like that.
Sure.
That is going to have to be a super app, and then you can do a lot of things, because I also said that even when you get early in the morning and you go to a coffee shop, you are paying. We are using money all the time, and and because of that, I think that at the end, the real digital super bank is going to be like WeChat. We are talking about a super app where you can do a lot of things and you are rewarding yourself to a lot of things. And they are going to be so cool because they are creating in the 21st century. So they have all the data. So you can cross everything and you can anticipate to your client. And I think that this is the key, because you are going to have your client like a rat in a cage. I don't know how to say that in English, but it's like that. You are not going to lose the contact of your client, and you are going to be with your client in every hour of his or her day. And I
think there's a big precondition there, Gabriella, because I think everybody wants this,
but nobody's doing that.
No, but also there's one big challenge is that people don't want their banks to know everything. And it has to do not with trust, but actually with credit decision-making power. So the one that's going to decide whether you get a mortgage, yes or no, you don't want them to know everything about you. That's sort of a personal feeling. I think this is also where people don't want to share their Facebook data with the bank, for example, because some wild party pictures might actually give the wrong impression about your risk profile. Yeah. So this is how people think, I believe. So there's one of the challenge where you see that a lot of people they trust that the bank won't lose their data,
Yeah.
But they don't want the bankers to know everything about it.
Yeah, I know. But if maybe I didn't say quite well, but I said that the real digital bank of the future, with all the wallets and all these things, can build in that way. Or this is the thing that I would like to build in the future, because I think that they are going to have nice approximation to the bank. And I think that communication, and if you give something to the client, people is giving Google a lot of information. They don't think about the things that you are thinking. It's just because there's money in that process. I think that we are going to go with that barrier. We are not going to have any problem.
I agree. So
it's my opinion, at least.
No. So I agree with your opinion. I just think that it might need banks to actually get rid of that decision-making power for credit. So they might actually, if they source credit from another source and someone else takes the decisions, they get much more access to data. That's more my philosophy behind that. And some neobanks, for example, actually have tried that experiment with not having a banking license, but having a much more lightweight experience, and actually therefore actually getting much more lightweight interaction with their customers as well, and more data. Yeah. Curious about your take there, Alex. You've seen a lot, and we've also got the cue to wind things up very slowly, so we have to speed it up a bit.
Yeah, I can go fast, but I agree. I mean, I think one of the things that's really interesting is this question in the US of, do you want to become a bank or not functionally, right? And there are lots of advantages to becoming a bank. In the US, we've made it very, very difficult, even more difficult in recent years. And so Varo has taken the step to become a bank. Lending Club has become a bank. SoFi has become a bank. But there are other business models, as you're saying, kind of more lightweight ones, where you can play a really important role in the lives of customers. But from a balance sheet business perspective, you don't have to have the same capital. You don't have to be under the same sort of regulatory requirements. And we see certain companies taking that approach too, right? I don't know that Chime will plan to become a bank anytime in the relative near future. You look at like Cash App, which is owned by Block. Block does have a banking charter for its business bank, which is Square, but on the consumer side, it doesn't, right? And I don't know that it ever necessarily will. Affirm and some of the BNPL companies are providing more banking services or payment services, not just kind of the core lending that they're doing. They might not ever become a bank. And so I do think there is this really interesting strategic question of, do you view your ultimate destiny as becoming a regulated bank with all of the advantages and disadvantages, or do you think there's a different model that might be more economically beneficial that you can build without having to become a bank?
Yeah. No, I totally agree there. I'm afraid the time is already up, so we have to start wrapping things up. And I'll already get a penalty, I think, for being late. But it's really nice conversation. So thanks for sharing your insights. Maybe, Gabriela, what can we expect from you in the near future? Do you have any scoops on what we can expect from news from the companies around you?
Well, at least for my new adventure, the fintech mix with insurtech, I think that I would love to be live on the first quarter of 2025. So
Noted.
I will ask it for the New Year's Eve. So I don't know. With a neobank, with Denarius Finance, I think that is something built in the 21st century with all the data and without any tech legacy. So I think that we can do something different, mixing non-financial services with financial services. And this is something weird. And I would like to talk more about that in other time.
Yeah, great. Thanks. We'll definitely keep following that, Gabriela. So keep us posted, please. And Alex, any news from you to be expected on your side?
Just a lot more takes on the future of fintech. So fintechtakes.com, you can sign up for the newsletter and the podcast, but no, there's just plenty of news to analyze in fintech, and I'm looking forward to covering it.
Definitely. We'll subscribe and keep up to date on your takes there on the fintech development. So Thank you for joining us, Alex and Gabriella. It's been really fun to talk to you, and thank you for sharing your insights, and really looking forward to seeing you again next time. My name is Don Ginsel. This was episode number 248, the news from the fintech front from Breaking Banks Europe. See you soon.
Fintech Groove, on the tracks of an innovation that leaves its mark. The new podcast column powered by Milan Fintech Summit and Breaking Banks Europe. Hosted by Matteo Castelnuovo.
Hi all and welcome in a new episode of Fintech Groove. Today we want to talk about diversity and inclusion in fintech industry with a special focus on the gender gap and the gender equality in this sector, which is still today one of the main burden for the growth of this industry. To do this, we are glad to have with us Alberta Pellino, who is president and founder at Young Ambassador Society and founder and CEO at We Are FIBI. Hi Alberta, and thanks for being with us.
Thanks, Matteo. I'm very glad to be here with you today.
So Alberta, talking about diversity and inclusion with you, what does it mean for you to be a woman in a man's world of finance, startups, and financial technology sector? And how was your path in the global innovation industry during these years?
So just after university, I joined the financial sector in London. In particular, I joined the commodity trading desk in Goldman Sachs, and then I continued my career in a commodity trading house. I must say, when I joined my desk, I was the only woman in the desk. Of course, things are changing, but still there is a very low representation in women in finance. Just to give you some data, at the moment, women make about 30 to 40% of the finance workforce globally. But for example, if we go to see the senior positions, only 20 to 25% of women are in executive positions in finance. And in particular in trading, that is where I was working. In trading, there are only about 10 to 15%. And of course, this is a problem, but why this is a problem? Not just because there is not enough representation. So I really want to underline that it's just not an issue about inclusivity, but it's also an economic issue, because there are a lot of studies now that shows that having women, for example, in leading role in companies or also in finance can have a significant impact also on the economic revenue of the companies. I found, for example, very interesting that there was a study made by Fidelity, one of the biggest asset management in 2021. They analyzed the count of 8 million clients, and they found that women, on average, they have higher return on investments than men. And this is just to underline what I was saying. I think that is best for all the society to have more women involved in the labor workforce, especially in finance. And of course, this is the same for startup. So after spending about 8 years in finance, I decided to quit my job and start my startup, and also to manage my association that I founded when I was 19 years old. And I must say that also in the startup space, of course, it's a bit better, a bit different than finance, but still there is a gap. We have in Italy that only 20 to 25% of women are startup founders. In my experience, of course, having such low representation of women is a problem, but why? Also in the everyday life, I want to give you an example. So when I joined, I was very young, just after university. university, and happened to me different times that even I was on the trading floor, someone was working on the trading floor and asked me to bring a coffee or to make a photocopy or this kind of stuff, but this never happened to a male colleague, just because it was only me, the only female on the trading floor. And of course, this has an impact on the way in which people perceive yourself in networking opportunities. And of course, you don't have enough role model women as your managers to look at. But for me, that was a very big experience. And also the reason why when I quit my job, I decided to start my startup, Phoebe, with the goal of actually helping other women to be financially independent. So to learn about finance, to learn how to make a budget, and also potentially how to invest. So I try to transform something that I saw in my career, that is the lack of women in finance and the lack of financial education for women, in a project that tries to help women to be more present in the finance space. And this is also because I think that financial independence and financial education are very, very important for everyone, of course, but especially for women, because are the part of the population that knows more about this theme.
And we think that also there are not only women in the situation of diversity and inclusion needed, but maybe also the young people, the startuppers, again, like you, but also like a lot of young entrepreneurs who want to create their dreams, we can say, and so according to this, you founded the Young Ambassador Society, so a sort of engagement group to create idea and innovation, talking with institutions. So what does it mean for you to create this project, why you did it, and so how this kind of idea can be connected also to what you are saying in terms of diversity and inclusion?
Of course. As I mentioned previously, when I was 19 years old, so at the beginning of university, I started my no-profit association, the Young Ambassador Society. Yes, and now, yes, it's very big. A big growth over the year. And our main projects are the Y7 and Y20, that are the official engagement groups of the G7, G20. And this means that there are the platform that gives the opportunity to young people to push their ideas and proposals directly to the leaders of the G7, G20. As I mentioned then, I went to my career in finance, but I was still managing on the side the association. But then after I decided to quit, now I'm splitting my time between the startup and the association. This year was a very important year for us because Italy hosted the G7 presidency, and we organized a lot of activities to make sure that youth were directly involved in the G7 proposal. To give an example, in May we hosted in Rome about 500 young people coming from all the G7 countries, and they worked together also with the support of international organizations, ministries, but also the private sector, to develop policy proposals that were directly presented to the G7 leaders. And linked to this, of course, for me, this experience of founding and managing the association was very, very important. It was also very, very important then to start my startup. So, for example, one thing that I think it's very important for young entrepreneurs is also, from my direct experience, having an experience in the no-profit association sector, because this helped me to get the skills of building a team, managing a team, building a project, and having goals, deadline, targets, and trying to achieve them. And of course, as you mentioned, the role of inclusivity in this sector. Well, for us, for the association, is fundamental because, of course, we are based in Italy, but we work a lot on international level. And I might say that embracing diversity was one of the biggest goals of our association. We have a diverse team with young people coming from different countries. We deal with projects with young people coming from different countries. And I must say that both on a personal but also professional level, I learned a lot with this comparison with different cultures, different people with different backgrounds, different histories. And I was able to take all these things that I learned also in the experience with my startup.
According to this, or starting from this, according to you, what could be the main priorities for a young entrepreneur who wants to get success and fill the gap with the institutions in order to be recognized as an opinion leader in the market?
So the first one, it's for me, at least was for me, absolutely studying and be prepared. When we go in front of decision makers, both ministries and head of states, but also, for example, CEOs of companies, because we also work a lot with private companies, be prepared and know what we are talking about is the first thing. So my first suggestion is that do your homework, do research. Now we have a lot of technological instruments that can help us to do that. So that when you speak about your ideas, you know what you're saying, and it's very easy in this way to be heard. The second one is building credibility and a strong network, and this is very connected with the first one. I think that be prepared and studying help you to building your credibility, and also for me it was very important to build in time a strong network and a lot of partnership. For example, with the Young Ambassador Society, we work a lot with international organizations such as FAO, OECD, UNICEF, but also with ministries, governments, both at national, international level, and as I mentioned before, also with the private sector, with companies like Microsoft, Ernst & Young, etc. And a strong network and partnership also helps a lot to build your credibility when you then stand in front of decision makers that can be both in the private or in the public sector. And the third point, it's also about, once you are prepared, you have a network. Of course, it's very important also, especially in today's world, be able to communicate. So be able to communicate, be able to adapt yourself to the change of situation, especially in a market in which that change every day, because of the job market, the new skills, the technology, but also the global geopolitical situation and resilience. I think that also this is essential. So this would be my main points of suggestions.
And the last question, according to you, in the innovation world today, there is an hard or a soft skill which could be the main skill for a young entrepreneur or a woman to get success in the market?
I think that there are a lot, so I will not speak about the main, but from my personal experience, so, when I shifted from working in finance for a company to funding a startup, the big difference was that when you fund a startup, generally speaking, you have very small things and you need to be able to do everything. So the first things I would say, be very open-minded and be ready to do everything that you need. And of course, the second step, it's also being able to build a team, because at some point it's impossible to do everything in your own. So once you pass the first time of the startup, then of course the second step would be try to be surrounded with people that can really help and makes the difference in your daily work.
Thank you for your spotlight on this, and we hope to talk to you soon again. Thank you for being with us.
Thank you very much. Thank you.
Thanks for listening to Breaking Banks Europe, a Provoke Media podcast in cooperation with Fintech Stage. Don't forget to tweet us out, shout out, or post to the team at Breaking Banks EU on Twitter. If there's something or someone you'd like to hear on our cast, let us know. See you next week on Breaking Banks Europe.